John, we're back with another episode brought to us by American Federal Bank. What are you covering today?
Well, we talked about it last week. We're definitely going to talk storage, but it ties in with basis and it ties in. My main feature is going to be ideas, staying positive, getting ideas in front of you that are going to help for this year. At the end, we'll talk about cattle and the outlooks there. I do actually have some trades that we're not going to say, on air. Because we can't.
Sure, you're going to give 5 of them though.
We'll talk about some trades that we had on, that we're following on Twitter, that we took off that exploded. The ones that left without you, we actually had one of those on. The main focus I wanted to be today about is realizing what kind of market you're in, and then getting quality information in front of you. That's how you're going to do better. How do you do that? Well, call guys like us. We'll help you out with some ideas, but it's not ever going to go up. I'm going to put it in the bin and forget about it. I don't think that attitude is going to help this year. You're going to want to have ideas. So we're going to make this the how to get ideas, the framework for ideas, and what kind of year we're even in with the grains. And of course, again, we'll talk cattle, a little bit with the stock market, and leave it at that.
Let's go.
Welcome to Hedge Heads, where hosts John Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, got a question for you.
Yes.
What should I do with all my grain?
Yeah, that's going to be a super common question coming up, and that is every year. It's not just this year. This year is going to be extra special because of the extra amount of grain. What do you store? What don't you store? How can you play it if you don't have storage? How do you play it if you have storage? I mean, the combinations are endless. We'll try to touch a little bit on each of them. I think last episode I mentioned the changing of storage, like just the philosophy behind it. It was store it, ignore it. You're going to hear all kinds of rallying cries on Twitter. Show them who's boss. There's no corn out there. We'll just store it into glory. That has absolutely not been working at all. So what you want to keep your eyes on is basis. So everyone's going to put away as much as they can, which is very normal for this time of year, unless it was, there's been years where it's been near $7 a corn right off the combine, or $12.50 beans where you really know you want to take it off, or you want to get rid of it and right off the combine and not store it. This isn't one of those years. In a low price, high carry year, you're going to try to put as much into storage as possible. This holding it into spring has just been an utter disaster, in spring into summer. And I don't think guys are in the mood for that, but they do want to put it away. So how do you figure out what to store? What's the outlooks? You're going to hear different things every day. On Twitter, now reading enough over the weekend that have you believe that, the corn's overstated by 25 bushels and we're going back down to 1.2 pipeline supplies. It's not going to happen that fast, even if it did happen. It actually did happen last year, and it still didn't work storing it into summer.
That's so true.
Yeah.
The year it worked though, and you go back, and I think the argument is the same, is 2020.
Yeah.
When, they were 3 billion bushels, something like.
Yeah, it was in August report, it was 3 billion bushels. That's what they had. Just the scariest number you could possibly see ever in corn.
Yeah. And what happened?
Everybody wanted, that was long from 2019, which was a lot of people had carried in corn contracts for a long time. They threw it away. They didn't want to store everything into just a low price. See, like a lot of corn got let go very early. And because that happened, some of the worst marketing lessons ever in the history of marketing were learned that year. Now, why did that happen? A lot of different reasons, but I go back to 2019 and the fact that the crop was so poor, but on paper, it was gigantic. Everyone knew it wasn't there. It took a year and a half to actually show up. Now, remember that for the next bull market. It's about a year and a half in corn when everybody knows it's not there. And there is years where, the consensus is it's generally It's really not there. You know what I mean? We think that it's well overstated, or I'm going to store it as long as I can. But that waited everybody out. They never got their money. It was called the Great Grain Robbery. China started buying every day right about the time everybody started getting rid of all their corn. Then you had a nice little rally going into harvest. Even more corn got sold, and it just didn't. Nobody participated in that because of the scary numbers. Now, so you get, what are we at, 2.1? Does it even matter? Even if it's 185, you have feed and residual use went up 400 million bushels. So that's 400 over last year. And I don't know that there's more animals around. Looking at cattle futures, I would say less.
Cattle prices say no, there's not more animals.
Cattle numbers say there's less. So how we got to 400, who knows? So even if they bring off the yield, they're likely to bring that number down. They also could bring down exports, although it doesn't look like they're going to now. So don't get too excited and think it's 1.2 automatically. But what you want to do is start planning, like we talk about, and you want to start getting ideas. Well, that's where we'll start off today. You want to get ideas in front of you. Twitter, you're going to have a hard. You can't get recommendations off Twitter unless it's a regular guy. Like if you're a registered guy like we are, you cannot put recommendations out. And don't expect anybody to be putting anything quality out there. Why would they? Why do they need to put it out there for free? Maybe to try to get some follows. That's not where you want it. You want to get ideas in front of you and be open to ideas, but not like, let's say I talk to a client and we go over 5 different ideas for corn. I don't mean do all 5 ideas. Just start getting more information out there, getting the brains flowing, brain juices. I need to get my brain juices flowing right now. But you need to get ideas in front of you in years like this. So, not all the ideas are going to be good, but it might lead into something else. So you need to get in front of somebody giving you ideas that's watching it every single day, every single tick. Obviously, we fit the bill. Other guys will have their go-tos, but you need ideas because cash and just waiting in these markets is generally not. That's not going to pay the bills. I mean,
we should define what a good idea is too, because a good idea for you is not a good idea for
Oh, yeah.
Right. I mean, everyone there's more storage. There's less storage. There's different basis in your area. There's different contract. There's different months. There's what I do. My operating loan might be different. Maybe it's a line of credit. Maybe those are all factors in what makes something a good decision. So you need 5 ideas.
Yeah, that's why I'm not a big newsletter guy. Every single one's going to be different, and we tackle it that way. We talk to each individual guy and go over. And by ideas, I mean, like if this guy doesn't have storage and he's got to sell 80% of his corn at this price, I mean, then we are looking at call strategies that would make sense to re-own it, where the next guy is going to be sitting all on it. He's not going to be looking at calls. He doesn't need more corn. He has all of his corn stored, and he might be looking for ideas to generate income off his corn. Do you have any way while it's sitting here that we can look at? Then we'll go over those numbers. And those, like right now, they don't look great. I'm not selling a whole bunch of corn calls at a time of year where that's not a very good idea at a low premium and low volatility. But you need to start going over ideas that might lead into another one. And then between you should come up with ideas. That's what gets you through years like this. I was just looking at, for instance, December 4.55 is where December 26 corn is. We have a large supply up front. Probably not going to need all the acres next year, or at least they won't think that right now. So what if it's going nowhere? What can you do? Can you sell a strangle? What's a strangle? Or sell a strangle or a straddle. Just selling the put and call either right at the money or a little bit out of the money on either side. So what can you sell right at the money for? 34 cents. Call, 34 cents for a put. Makes sense? That's a lot of time. So you have 68 cents. Let's say you sell this now. So you sell a call and you sell a put. Doesn't really matter what direction it goes as long as it doesn't move fast. So as time burns off in a market that's unlikely to move a lot, can I pick up 12 cents in that? I'm not trying to get 68 cents. That's going to be very hard to do. You're looking to bleed out a premium.
You're definitely going to face some scary nights if you're trying to get all 68 cents.
Yeah. So what you would do is make a goal. Hey, I want to get 11 cents out of this. And then have an exit strategy also on, if something were to change. But that's what I'm talking about. I'm not saying go do this. I'm certainly not doing this. I don't feel like it's a lot of premium for that amount of time. But it might not be an idea you had thought of. It might be exactly what you were looking for. That's why you want to get a lot of ideas in front of you, not necessarily do them. But you're just not going to find that online. You need to talk to humans. AI is not going to get you there. You need to talk to somebody that's looking at this nonstop, that's expected to come up with these ideas to try to help. You also don't want to look for ideas that are going to make things worse. Where I think these numbers are wrong. I have a ton of corn. Let's buy a whole bunch more corn. You don't need to double up your crop in years like this. You need to look to see how we can make the numbers work. You look at the March futures is at 430. That's attractive. Can I do something with that? Lock that in, store it till then, get 430, maybe sell a call on top of it. If it gets low enough, do I sell a put to try to get that premium a little bit better there? Do I sell a put on maybe some of the short corn hedges I have right now? Let's say you're short some futures. Do I sell a put saying, hey, I'd get out of my futures if it got down there? If not, I'll take that premium. Again, we're going over a lot of ideas really quick, and these aren't ideas meant to be doing right now. It's just I'm trying to show you that you need to be talking and have conversations to get through years like this.
I have one that you didn't even mention, John.
What's that?
Sell your corn off the combine, and you can buy the 450 for 12 cents.
What month?
That's March.
Okay.
So 430 contract, you could buy the 450 call for 12 cents.
Yeah, so if you're going to put your corn in the elevator for 5 cents a month, you can do the math here. It's a lot cheaper just to buy a call. And then you don't
79 days.
Yeah, and you don't have the downside risk either. Let's say corn drops from here, you don't have the downside risk. So what is, the next question is going to be, where are we going from here? You're going to have bottoms that come in this time of year. You're going to have bounces that come in this time of year, which is very normal, what we're seeing. And then lower lows into December. Sometimes it's higher in December. So what I'm saying is the seasonals get very messy basically starting now. Very likely to bottom temporarily at least. September can be a weak month. There's been last year was a good month, but that's not normal. So you just every day you're in there looking for ideas. It's gonna it might not change a lot, but it might change a ton. Like we just saw this report, looked like corn is going to go way down. Now we've rallied, and beans have rallied. That's certainly provided some opportunities for hedging in the beans. We won't go into specifics, but it's getting to numbers where it's starting to work. So ideas and more ideas, and find guys that get good stuff in front of you, or are willing to talk to you anytime you want to talk. That's going to be key to making it in years like this with these prices. But at least the outlook's better than we saw. I meant we're not going down anymore, but be realistic. The basis stinks. China's not buying beans yet. Watch basis. That tells you how long you should store it. Basis gets better quick, store it longer. If basis doesn't get better quick, like last year on a rally, sell faster. Basis is everything. Spreads are, a lot. But watch that. If that cash market doesn't strengthen up, and normally it doesn't this time of year, but if you're not seeing any pulse on that cash market, all these grain rallies are sells for now. You know what I mean? It's my opinion with weak basis, weak cash markets, that generally the markets would be a sell. On
the flip side, if you see basis start firming up this time of year, start paying attention.
Start getting your storage cleared out and getting ready to sit on it. Recognizing what kind of year that we're even in is big for storage as well. And then I talked about this quite a bit last time. Getting ready to put it in storage and 2 weeks later taking it all out 100% if you need to. You don't know what kind of rally. You could get a 50-cent rally in 2 weeks on some news that looks, on face value, looks like it's going to be really bullish for corn, but it might not be bullish for a year. You might get 50 cents right away on the funds covering shorts or whatever. You might have to take it out right away. Incremental sales are a good technique. Just sell a little bit along the way. Again, none of this has been working very well for the last few years. It's been going to a price that seems kind of suspect and then selling everything. So the markets have been a little different for the last 2.5 years. This last year was really difficult because we never had a summer rally, never had a threat. We had never had anything to build any sort of good price on. So we're starting behind the 8 ball this year. You're going to have to be extra savvy to get through and market well this year.
Yeah, absolutely. Speaking of beans, let's talk the soy meal spreads, because you shared a bunch of charts on those earlier back in July.
I was tweeting it out. And one of my last tweets is I'm giving up on this. I'm giving up.
That's when I should have bought.
We briefly had it on. A few guys briefly had it on. Yeah. And then, you get bored when it doesn't automatically make you $1 million. You get rid of it eventually. Or if it grinds down $10 or $20 on you every day like that one was doing. Yeah, the meal spreads exploded. I did like that setup mainly because I thought there was going to be some weather pattern in the summer that was going to be threatening and get the meal to cover their shorts. Never did. Out of the blue, September and October absolutely exploded against the other meal contracts.
Well, the VZ spread went $110 in 5 days.
Yes. So that's $1,100 and in a spread that was just DOA. It was not moving. It was going down. It was on the lows. And then you get this massive short. I was attracted to that because it was going in a time of year where you normally would see a rally. It's quite sharp, maybe. Bean acres weren't high, and the funds were incredibly short soy meal. So the setup was perfect. It's just when the bomb went off, everybody had given up on it.
And that's the way like when we talk about corn or any other grain really, and we say don't get frustrated. You got to do what's right for your operation. You can't just pay attention to the news. This is an example, and we're just as guilty of this because I'm counting 10, about 15 days leading into this 5-day rally, we're down.
Yeah.
So there, of course, I would have cut my losses there as well.
Yeah, right? There was no warning sign this was going to happen.
Right.
It was pointed out numerous times. I think I pointed out a few times that we were following it, possibly getting in, which you really can't say. Just that we were following it. And then I'll have daily conversations with guys, and it's like, hey, this is a setup. What do you think? Get me one or two. That's how it would happen if they got them on. I wasn't going to pile into this thing because the weather was pretty good from day one. Yeah. But still, the setup was there, and it absolutely exploded. So even in the terrible markets that we have, you will find opportunity, and that's what I'm talking about, ideas. This was something that we had on our radar screen, and we could have easily had on, but because of the weather, we didn't. But you want to keep getting those ideas in front of you. Soybeans, a lot of sell signals went off last week. The free sell signals you heard. A couple clients told me their guy said their sell signal and the technical side, whatever. But I did hear it about 3 different times last week, and this, kind of looks like it did get here. Perfect example of a bad basis market. Looks great on paper, maybe in the future at some point.
Yeah.
If things happen, but now China's still not buying, and these markets come off easy. That's what I'm talking about.
So does that make this a sell? This rally? Do you want to? Are you bear spreading this spread now?
No. They've already
you
got.
You can't do the opposite of it.
I looked at November 26, November 27, which is next year's bean spread. I think it was like -4.5. It's just not a spread that moves a lot this time of year, and it seems like it's got more risk, just as the corn bear spreads, more risk to the upside than's worth it to the downside.
I don't have that one on. I have been watching the July 26, November 26 spread. I think that one's I'm certainly not ready to make a move at all in that.
Well, we were in it.
It's in a different spot than it usually is, but I also think it could go way more negative than it normally does.
Guys got in that one after the report. He had to be quick, and it went from 15 straight to 32.
Yeah.
I think most everybody's out. There might be a couple guys still in.
It's been sitting at 30 for a while now. But.
Yeah. So I look for a pullback there. I would love to get involved if China gets in the market like that. That I think is going to be a great spread. Hard to do this time of year with the supply coming in and no more good news. That can change politics wise. We could get a big soybean deal announced. So soybeans are kind of in just a hold pattern for me. A lot of guys are going to sell them off the combine as they do every year. That's very common. What should you do with your beans? We planted 81 million acres. I mean, if we can't rally this year, I mean, if you store your beans this year on 81 million acres and we can't rally, I don't even know what to say about that.
Well, I know what to say.
What's that?
South America, China.
Yeah.
So, I mean, unless you have biofuels, where else are they going?
Yeah. I mean, it's like you should take a chance on storing beans this year. I think just because the low acreage number, it's probably not finishing off perfect.
Right.
Hard to tell. There's so much drama all the time online. That's the problem with giving everybody a voice. I kind of liked it with the less people talking. It gets confusing if you keep on reading. If you keep on reading, you're going to find anything you want to hear.
Baseball stats. We can go back to baseball stats.
Yeah, but just I think you can cut all that out and look at basis. And basis stinks for soybeans, especially out west where there's no bid. I don't think, how are you going to sustain a really sharp rally without a bid out of the west? It's going to be hard to do.
That's your answer. I mean, the reality is if China does come in the next, say, 2 weeks, after Labor Day, you start seeing a whole bunch of China. You're going to see that basis ramp up fast, and you're going to see these spreads ramp up fast.
And that's really why it's a tougher market right now, because can China stay out? We don't know. We don't know with all the South American supplies how long they can go. They look like the rumor is they're covered to like November, or into the first week in November. But still, it's not good to see nothing on the books this time of year for us. Generally, we see a lot, and there's nothing.
I'm going to remind you of one of my favorite statements you've ever made on this podcast.
Oh,
John.
boy. Well, yeah, right.
All right, you ready?
Yeah.
You once said, if the kid at Cargill doesn't buy enough beans, Cargill doesn't tell you he didn't buy enough beans.
Yeah.
You find out the day they absolutely have to have them.
Yeah, they're not gonna pretend like, hey, sit on your beans. Look, we're underbought, and if you hold on for 2 months, we're gonna have to way overpay you. You're just not gonna get that message in your inbox ever. They're gonna be offering free storage. They're gonna be offering all these little carrots they dangle in front of you. It's not a nice world where they just are hopeful. The guys buying them trying to make money off you, where they just tip you off that they're in a bad spot and they're going to need a lot of beans. It's just going to show up like the meal. Like clearly there's something going on there, probably on the commercial side, of some sort of short squeeze, and it happens that fast. So that's why I keep going back to spreads and basis. Watch that stuff. They can't lie. In the great grain robbery, not train, but that the basis was good for 2 years in corn before this happened.
Yeah.
Better than normal during harvest, better than normal the whole time. People were commenting, this is not what we're used to here. And that's what you want to be watching for. And it's usually a slow process, but can happen very rapidly in beans. Basis can improve virtually overnight. And them ramp up and need beans for, indefinitely. It's been so long since that's happened. I kind of forget how it goes. But it used to be you just needed to hang on to beans and you could just set your watch by how tight it was going to in the spring and the summer. Those days are just gone. I mean, we don't have that right now.
And the reality is it's because of South America. I think that that's an underappreciated. When I go out and talk to people, I think it's still underappreciated just how much South America is producing.
Yeah, it is. And I think they're starting to catch on. And also it gets political with tariffs and everything. But you look at corn. I mean, this stuff's selling better than it's ever sold before.
Yeah.
Tariffs are not affecting corn in the least. I doubt they're affecting soybeans very much. Our relationship with China has, gone back and forth. But don't kid yourself. They would be buying our beans if they needed them. They would absolutely be buying our beans. And they haven't been able to. They've been trying to get away from our soybeans for a long time. It was preferred over South American beans. We had better quality, and it's changing. And they grow more, and the production keeps expanding. We're losing our export market and being super important for soybeans. But I would agree. It's just I don't think it's political and tariffs. Because demand for corn is better than ever. It's the production in the world that keeps going higher, and there's going to be some growing pains in the U.S. too. I think in the years ahead, days ahead.
Yeah, absolutely. Speaking of growing pains, let's talk about how we're going to grow these cattle herds, huh?
Yeah. Cattle feed.
Where are we at?
It came out and it was slightly disappointing. There was more placements. Like if your bull was disappointing. So I think what was that? 3% more than what they thought. I don't have my phone on me here,
I
but
didn't even look at the numbers.
it was 98.7 or 8, and they were expecting 98.1 for overall cattle supply. And the place number was definitely higher than they expected, 3 or 4%. So cattle opened down quite sharply. But the old cattle market just slowly climbed all day long. It's going to get volatile. It's going to get wild. Cash is going higher. Products going higher. And that's what's going on in cattle. And the cattle are going higher. Until you see something break down, it's going to be hard to have a sustained break in cattle. But it is futures, and you're going to see one day it happen, and you're going to wonder, boy, that's weird. Cash is still going higher. They're going to see beyond that, the guys in the know, and see a weaker cash market 2 weeks from now, and then it happens, and you're like, oh, that's why they sold it 2 weeks ago. That's all commodities and grains or anything. The weather guys, the hedge funds have better weather guys. Why are they selling it, on this hot and dry weather? Well, they see 2 weeks out, not what everybody's trading. It is futures. It's not today. And one day that'll happen in cattle. When they anticipate a weaker cash or a weaker anything, you'll see a sell-off. They've tried that a few times. It's worked terribly. Yes. It's gone down, 3 or 4 days and just come ripping back to new
max. I don't think 4 days. I'd have to go back and look at the chart, but
yeah. So the bears are wore out. Yeah. So they're now everybody's on the sidelines, and I'm on this. Everybody's like, when do we get another one short for hedge? When do we put the put on? And it's just you're looking for any of the 4 things that might top it, and all 4 of them are still there. Well, I shouldn't say that. Seasonals are going against it, but 3 out of the 4 are working for cattle.
See, let's go over the 4. Seasonal, slightly against it. Cash, going up.
Going up.
What else do you have your...
So seasonals, cash...
Put you on the spot.
Yeah, well, and I should know. Box beef, obviously.
Box beef, yeah.
Yep. The demand side of stuff, and then the funds.
Yeah.
Clearly,
demand side is holding. It's not strong though, right?
It's been really strong lately because they cut the kill back, so they're killing less meat around.
Okay.
And then so the box beef goes up, hurts demand. That's why they don't like to slow it down.
Yeah.
Because then it really hurts demand, and that's the juggernaut of this market is that the higher price hasn't hurt demand, which is, I find, astonishing to this day.
Yeah.
But that's really the process. So they're cutting the kill back, supporting the box beef prices, going higher, increasing their margins, and eventually hoping to look to back cattle up and get some leverage on it. It could end tomorrow with the Mexican border opening. Although there was a screwworm case in Maryland on a person, not a cow.
Interesting.
Yeah, and I don't even know what that means for the cattle market. I would say that's more bullish than bearish. If there's going to be less cattle around, that's more bullish. Or do people say, ooh, that's gross, I'm not eating beef? I don't know. I mean, initially they usually sell stuff off when you get stuff like this. So was that part of the sell-off this morning? Maybe. Does it even matter? Now, if you get it in the herd, it'll be interesting to see the way it reacts. A lot of people have opinions on that. That's what they're trying to prevent. They've had it in the 70s here. It's really hard to get rid of, too. Basically, it eats you while you're alive. It's flesh eating.
I know they had it in the 1870s.
Yeah, probably.
I read a little history on that.
I watched Little House on the Prairie, and it was tough. It was tough back then.
It's tough.
I mean, you could buy farms for pennies on the dollar, which is what happened to Charles.
So, and then from the fund side, I mean, they're long, and it appears they want to buy anytime the cattle goes red, huh?
They've gone into full buy mode. Open interest had been increasing. So that's the healthy side of it. That'll eventually work against cattle, big time. So there's a lot of opinions on how this is going to end. I think it's going to end terribly, in tears, and can go a lot lower than people think initially, although I think we'll bounce back. Other guys are looking for this soft, magical landing, and it doesn't usually happen in cattle. So when it goes, it'll probably really go because of how crowded of a trade this is. Overdue to the downside. That's where, if you have puts on, you can get out. Where LPR, you're just stuck in your window that you have. And I think it's a vastly superior product to LPR, but of course, it's different for everybody. But I like the idea that if you had to put on and it dropped at $50-$60, which is still going to be really high feeders, really, it'll still be $3. It'll still be $3. Yep. That you have the choice in getting out, and that can be huge, especially if it rallies back up to 330. You make it on your put, and then you make it on your cattle. So I like that flexibility of the puts. Guys are pricing puts. This is different. They are definitely calling and saying, how much is this going to cost me? And what they're seeing it as cost of business, just like an insurance cost.
Yeah.
It's expensive. $17 for at the money in January. But when you look at the money at stake, it actually isn't that expensive. So guys are now actively trying to figure out how to lock this price in. And here's the worst part about this is people get so beat up in margins. What happens in any bull market, grains or otherwise, is you see this August 26th feeder cattle out there, and it's only $15 under the front. It's not, it's not that discount.
We've talked about that for a year.
And if you're a feeder guy, but you're beat up by these margins in the front, you don't want to expose yourself to more margin risk. But you can guarantee yourself very high feeders for the next year and a half, really, or a full year. Yeah. But if you did a little extra in August, for the ones that aren't even on the board, and then eventually roll them out, you can get quite a bit of coverage here and guarantee that you're going to make all that money. The problem is you get killed in those margin calls. You do not want to go mentally through that whole deal again. You don't want to go talk to your banker about this plan. You're so sick of margins that you're just like, it's never going to fall. I give up. Those markets tend to fall the most, and then you wish I should have done that. But I can kind of see this coming.
We just talked about that with bean meal.
Yes, guys get beat up. They don't want to hedge again, and that's the one that you really need to hedge. That's likely to happen in cattle, but it is hard. It is capital intensive. You better have a very good plan with your banker. You better have these conversations early, and have a credit line. And know what you're doing, or you can buy a put and have the defined risk, but that's still $8,000 for a put.
And if we knew when that was, we would not be in this business. We'd be in the business of increasing our own bank.
Yeah, we'd be on a yacht, just like Trading Places with with a little drink there.
We'd have our Starlink and our laptop, and
no one's ever seen a market like this, so you can't know what it's going to do. Everyone says it can't go down for 3 years. I would say the majority of cattle guys don't think it can go down because the herd isn't rebuilt. That's not what's going to end this. It's going to be on the demand side. It's going to be on importing more than we've ever. And the bad news is once you open those channels, those new meat channels, they don't close. Like, they're expensive to open, but when it gets to be like this, it makes economical sense. Once those relationships are established, you might get, some discounts later on to where these channels remain open. So the bear markets following this sort of thing tend to be very punishing because of that. That can happen in beans and corn, where they're literally importing beans here.
Well, and to be fair, if there was a drop, say it was a fund move or cash was lower and the funds decided to pull out, so you had a big drop, it wouldn't necessarily mean that big drop is permanent either.
No,
it wouldn't. Of a bear market, it could easily go back and we could be in equilibrium for the next 2 years.
Yeah, it did happen in 2014 that way, and nobody saw that coming. Like, no one really saw the bull coming, and then no one thought it was going to drop like that after that. And it was going to take a while to rebuild the herd, and a lot of the same stories, actually. This is different a little bit because they pushed so many people out of business by taking so much of the profit, or all of it, and then some. It pushed enough people out that it caused this. Like, their own greed caused it. They deserve this, but business is business. You have to make money killing cattle. It'll get back in line. The pendulum swings both ways. It swung too hard against the cattle producer for too long. Now it's really swinging the other way to where it's actually going to be harmful. And you talk to a cattle guy, I think they agree. I think they all like what's happening, but I also think they know what comes at the end of this. It comes with a price later on.
Right.
So it's going to be a volatile mess. We're at levels now where it appears to be unsustainable, but it's looked like that for a while.
It's done that multiple times.
Yeah.
So, earlier you brought up margin calls, everyone's favorite thing.
Margin call.
And that's why we want to, take this moment to thank our sponsor, American Federal Bank.
Yes.
Who is always happy to hear from you when you have margin calls. Yes. But let's talk about the financial markets.
These are the guys that stand behind you. And I've talked about this in past podcasts, how important that relationship is to not have these nasty surprises. If you come in there with a good plan, and I'll have a plan with the banker and we'll all go over it together, or an advisor, And it's good to be on the same page. Those accounts tend to do really well. The bank's more than likely to work with you on almost all the stuff. They're probably not going to let you buy a whole bunch of corn on top of what you already have, but if you're hedging and the numbers work, they should be working with you. So that's why they're a sponsor. That's a very important part of cattle and also the grain side of stuff. Without them, it would be hard to cash flow. It's like farming is one of the hardest business to cut cash flow because you don't get paid like a weekly paycheck. You know what I mean? It's all at once or it's in the bin. And, so anyway, bankers are very important, very, very thankful that they are a sponsor. And we do talk to bankers all the time.
Yeah. And that's why it's important also to have that plan to know what you're doing and why you're doing it.
Yeah.
Here's what we hope to achieve with this and the goals and where we are going to cut our losses.
Yeah.
That's probably one of the biggest things.
It is
having that mental stop.
As yields become clear now, these are conversations I'll have every day. Here's like, this guy will have this, but I got to sell this. What do we do? It's going to be all this, this is my situation, or I got everything marketed. I'm just going to sit on it, so everybody's going to be different on that side, but there's going to be a lot of it coming at us here very soon. And there's not a lot of great answers. It's not like we have all these hot ideas that you got to get going on this stuff or you're going to miss out. This is a bear market and we'll have bear market ideas until something changes. A lot of people are already getting ahead of themselves and deeming this a corn bull, but saying the numbers are going to drop drastically. They kind of forget how the USDA reports work. Once you get that mark up there at 188, that's a high mark and it's probably coming off. It's still most likely going to come off slow. I think one guy put out like it's 2.1% off the August number. More often than not, it's only 2.5% drop in yield. And then there's been a few years where it's been a lot larger, but generally it's not that much off the August number. So even if it's 185, like we talked about earlier in the podcast, it's not going to matter a lot. You start to get in the 170s and it would, but I mean, what are the odds it's going in the 170s anytime soon? Not high.
Right. Well, you brought up one guy. I did see one guy on Twitter that wanted to hold StoneX and the USDA accountable for their numbers here. Now that Pro Farmer proved that they were wrong.
Yeah, let's get rid of all the analysts and let's get rid of the guys that follow the markets and go to cash markets. Let's see how that goes for everybody.
Yeah.
Let's get rid of all the information. Now, you can not like the system and how it works for sure, but again, do something about it. Get on the local level, start working a grassroots thing to get, maybe you don't like, a lot of people don't like this August report. Do we need this one before we know the yield that can be really damaging the price? I agree. We probably don't need to throw out huge numbers in the August one because we don't know what it is, but you have to change it organically. It's not going to just automatically change because you whine on Twitter about it. No one's out to get you. You need to change what you don't like about it. Would it be easy changes? No, but still be vocal about it to the people that can make those changes or run for office and start running on that sort of stuff. It's just, it doesn't do any good just to whine about it on Twitter. What you want to be looking, and I started with this, is for this is a situation. How can I make money at it? Or how can I improve my situation? That's where you should be at. You should not be at, everyone's against me. How am I going to pay the bills? You gotta look to see if there's anything you can do to help yourself out or what's likely to help you, or look for ideas that could help you. And that's all you can do about it, really. I mean, that's what you have to do.
Absolutely. Yep. Do you want to touch on speaking of bear markets or bull markets?
Yeah.
You want to touch on the stock market? The last couple of days have been a little hairy.
Well, after a 900-point rally.
Right. I know. But it's actually been red instead of everyone buying and buying and buying.
It seems like it can't go down. And until one day, I think it's going to go down a lot. I mean, but I've been thinking that for a long time. So my question is, why doesn't a guy just buy a micro? Why is it always we should sell a micro?
Right.
Why not buy a micro with a stop?
Why haven't you bought cattle?
Why not buy a big contract with a stop? Just use a stop. But you're gonna have your down days. But this thing is on a tear. I think we're probably in a large bubble. I think a lot of people think that. You saw the car loans, 7 years is now getting to be one of the more common loans.
Absolutely.
People are stretching out these to afford the assets and these prices. They're stretching out the
I saw
the
you can get a 10-year loan on a truck right now.
Yeah, see, none of this is healthy. I had a pretty long loan on my boat. I shouldn't have. I should have paid it off a while ago. It's paid off now, but it seems like a great idea at the time because the numbers work and you want it.
Yeah.
You want this thing, but that'll catch up with everybody.
Yeah,
Eventually, what you're going to do is have a ton of debt and stuff that's depreciated a ton, and not have any money to pay for any of it.
But John, that new Raptor I looked at the other day was $98,000 off the lot.
Yeah,
so I'm going to need a 10-year on that.
And these kids, they have no idea what Woolworth's layaway was. I mean, it's like, or Kmart. It was like,
right.
If you might wanted it, and if you were lucky, your parents let you put it on layaway, and you probably were still gonna have to do something like bale hay. Do something to earn the money to pay it off.
Yeah.
These kids don't even know that if you want an iPhone, you might not get one. Like they just go get one on payment. This like the last 15 years, 20 years has no idea that you might not get what you want. Not every kid's situation's like that, but I'm just saying in general, they don't even know there can be a bad market. It's starting to get that way with the stock market. Yeah. It's been so long that people don't even know the stock market could go down. I mean, how many financial consultants are in Fergus here? This is a town of 14,000. There has to be 70, and I'm probably low by 100.
Yeah. I mean, it is pretty much every corner.
There's
and if you put banks on top of it, it is. Oh, yeah, we're in between too.
We're there's one on our right side. I mean, we could touch them if the wall was see through, and the other side there's another one, and that's just in 20, 25 feet,
and literally across the street is two more in an office.
There has to be 5 Edward Jones here.
Oh, minimum.
I drove through.
I think it's 7, actually. There's 7 Edward Jones offices in a town of 14.
Yeah, Little Falls. I saw 3 driving around Little Falls on the way to the soccer game. And that Little Falls is a tiny town. I mean, so it's been collecting financial advisors, forever, and there's no tough conversations. It just goes up every day for everybody. Bonds a couple years ago, maybe if they had a bond portfolio at 0%, they deserve those losses if they did. But it's a sign of the times. One of these days, though, it will be the real deal, and I have a bad feeling it's going to be terrible. Just because we've waited so long to actually correct the asset prices to the correct prices. I think if the job market comes off, then I think it's all over. So that's what I would be watching if I'm watching the financials. The job market, if that weakens up, it's going to be trouble. What chart is that? Yeah. That's ridiculous.
So it's my. I was going to put you on the spot to end the day, John, because this is a market near and dear to my heart.
What's that pattern called? W? I mean, with gigantic wings.
This is coffee.
Okay.
I was just going to say, what's going on with coffee since the beginning of August, and why did you not tell me to buy on July 31st?
Dry. It's dry. This is the second year in a row. Last year was a full-blown drought.
And I was just going to put you on the spot. Did you know what's going on?
Coffee can make you a millionaire if you catch it. I mean, that's what got into me, Ken Roberts. And like they would show this, if you'd have just bought these $120 coffee calls, you'd have been $1.2 million. It's like that's what got me hooked into commodities was basically coffee. The idea that coffee calls could make you a millionaire. Still haven't hit my millionaire market, but I wish I would have known. Hot and dry though, and this will be the second year that it's affected it.
Look at that chart though. That's a W.
Yeah.
I mean, that's I don't know what you call that pattern, but it's called a rocket ship in my opinion.
Double bottom looks like the soybean meal spread charts. But no, we got to find that. That's what we'll be looking for coming up here. We're going to be looking for these markets that have that.
Turn this upside down. That's what I'm looking at in cattle.
Yeah. Yeah. It's cattle is a market that's attracted a lot of speculators that aren't cattle guys. They want to know how to get short this thing. I wish there was a safe, cheap way to do that. And there really isn't. I do have some spreads on. So if you want to know what I have on, give me a call. There is a couple things that actually through this whole last month and a half up, the bear spreads have actually been gaining. So I do have one in live cattle and I have one in feeder cattle that I like. There's varying degrees of risk. You can make everything wider.
I love your live cattle feed. I should have been spread.
Yeah, it's working. It's working.
One.
Yep, it's been working. And so I on if you want recommendations, call me directly and I'll tell you exactly what I'm doing in cattle, explain the risk to you. But so we are doing some stuff there, and it has been working. By working, I mean not going against a guy in a roaring bull market. So, but if it were to fall, they'll work really good. It doesn't even have to fall fast. It can just fall over time. Even if it doesn't fall, these are kind of set up to gain, if it's like last year's market. So if you're interested in that, give me a call. I'll tell you exactly what I'm doing. Grain's a little tougher. I do have some ideas, but I also I want to see a little bit more of this weather, even though it's not going to affect a ton. Doesn't seem like there's a lot of rain. If the attitude is shrinking, I don't want to be too bearish here, but I'm starting to think about puts again. I hate to say it. I'm gonna ruin the podcast. I'm starting to think about puts again. Got to find something I like, but it's treated me good if you get out. Like corn drops, but you hang around too long, and this can easily be the time of year where you hang around too long. I think I had 360 March put spot last year. That was a whole pile of expired worthless options there. The guys that did that. I
lost a lot on that one myself.
Yeah, because it looked really big last year, and a guy hung around too long, and then it got, I wouldn't say bullish, but it rallied a lot. It looked bullish on paper, but I'm starting to think about it, which tells me it's probably wrong, because you got to look at the calendar.
You got to be wrong a couple times a year, John.
Oh, I cover that. Yeah, I cover that spread. No problem. So I don't know. It's like you're pulling 5-6 cents out. There is no big home runs, even though I have $4 March puts. I think we talked a lot about it on the Insider about those. They got to 14, 15 cents, maybe 5.5, 6 cents, 7 cents where they're bought. Even when you win, you're not really winning in the corn market right now.
Unless it's just trying to add to the bottom line, though, is really, and if you can do that a few times, it's certainly going to help.
Unless you're Theta Trader, he's out there. He's Theta Farmer, excuse me. I don't know why I messed that. Yeah. He was putting a few of his victories out there online. You should check him out.
We're having steaks tonight. I'll try and get a report
on Theta Farmer. He's mine.
Yeah. Let's tell people how to get a hold of you, John.
Sure. 218-731-1578.
Thanks, John.
Yes.
Switch it up and let's start with banking.
What's there, though? I meant that is nothing I'm familiar with.